Is that you? Are you Edmona? What happened to you?
Yes, I am. Because of injuries caused to my feet due to your punishment last time, I was not able to cross the street at the required speed, and I had a car accident.
Yulawiti, Yulawiti. I admit that I tried to teach you a lesson to become a committed person. I believe I have made a wonderful success in this connection. My success is proven by seeing you today among us despite your injuries.
Is that acceptable logic? Did you expose my life to the risk of death to teach me a lesson? You are still Maftaraya Sedenti.
You will be okay very soon, and you have become a committed person. What an amazing double target by a single step is that. Anyhow, today, I am going to give you a lecture about debt securities classified as available for sale securities. Precisely, they are measured at fair value through other comprehensive income (OCI). Securities that are not classified as held to maturity or trading are considered available for sale. The initial acquisition is recorded at cost by debit to available for sale securities and credit to cash.
Are available for sale securities remeasured at each balance sheet date? And if yes, at what value?
At each balance sheet date, available for sale securities are remeasured at fair value.
If available for sale securities' fair value differs from their cost or their carrying amount at the balance sheet date, unrealized holding gains or losses result. How these gains or losses are treated?
This is an excellent question, Edmona. The unrealized holding gains or losses resulting from remeasurement to fair value are reported in other comprehensive income (OCI). If the fair value is less than the carrying amount, an unrealized holding loss is resulted. The journal entry will be debit unrealized holding loss (OCI) item and credit available for sale securities fair value adjustment.
How the available for sale securities carrying amount, earnings, unrealized gains or losses, and cash flows are presented in the financial statements.
1. In the balance sheet, the balances of the securities and valuation allowances are netted. One amount is displayed for fair value in the balance sheet. Individual securities are presented as current or non-current asset. In the equity section of the balance sheet, unrealized holding gains or losses are reported in the accumulated other comprehensive income, the real account to which OCI is closed. 2. In the income statement, realized gains or losses, dividends, and interest income, including premium and discount amortization, are included in earnings income statement. 3. In the statement of comprehensive income, unrealized holding gains or losses for the period are included. 4. In the statement of cash flows, available for sale securities cash flows are from investing activities.
We will certainly understand this subject in a better way if you give us an example on how to initially record and remeasure available for sale securities.
Okay, assume that Satauda and C.E. Salama Company, S&S Company, purchased 1,000 shares of Amyani Company mandatorily redeemable preferred stock, a debt security, on April 1st, year 1, at the fair value. S&S Company classified this investment as available for sale securities. On May 1st, year 3, S&S Company sold all its investment at fair value. The following are the fair values per share of Amyani Company preferred stock at the relevant dates: April 1st, year 1, $25, December 31st, year 1, $32, and on December 31st, year 2, $27, May 1st, year 3, $31. You are required to make the journal entries at each of the 4 dates above and explain how you arrived at the dollar amounts.
We appreciate if you answer because the subject is still new to us.
Okay, note that the changes in fair value of Amyani preferred stock are temporary. 1. On April 1st, year 1, 1,000 shares purchased at $25 each. The entry to record this purchase transaction is debit investment in available for sale securities for $25,000 and credit cash for $25,000. 2. On December 31st, year 1, the balance sheet date, the available for sale securities need to be remeasured at fair value and unrealized holding gains or losses are reported in other comprehensive income. Since the per share's fair value on December 31st, year 1, is $32, thus a gain of $7 for each share need to be reported, $25 at the purchase date minus $32 at the balance sheet date. Accordingly, The gain is calculated by multiplying $7 by 1,000 shares, which equals $7,000, and the journal entry is debit available for sale securities fair value adjustment for $7,000 and credit unrealized holding gain for $7,000 OCI item. In doing so, available for sale securities of Imyani appears in the balance sheet of S&S Company as at December 31st, year 1, at $32,000, 1,000 shares multiplied by $32. In the equity section of the balance sheet, accumulated other comprehensive income is $7,000 credit balance, and in the statement of other comprehensive income $7,000 appears as unrealized holding gain. 3. On December 31st, year 2, fair value per share is $27. Thus, a loss of $5 for each share need to be reported. $32 at December year 1 minus $27 at December year 2. Accordingly, loss is calculated by multiplying $5 by 1,000 shares, which equals $5,000, and the journal entry is debit unrealized holding loss OCI item for $5,000 and credit available for sale securities fair value adjustment for $5,000. In doing so, available for sale securities of Imyani appears in the balance sheet of S&S Company at $27,000, 1,000 shares by $27 each. In the equity section, accumulated other comprehensive income is a credit balance of $2,000, $7,000 gain in December year 1 minus $5,000 loss in December year 2, and in the statement of other comprehensive income, $5,000 appears as unrealized holding loss. 4. On May 1st, year 3, all shares in Imyani Company were sold at $31 each, at a total of $31,000. Comparing the cash proceeds from disposals of the shares and its carrying amount of $27,000, a $6,000 should be recognized as gain in the income statement, being $4,000, the difference between $31,000 sales proceeds and $27,000, the carrying amount plus $2,000 to close the credit balance in the accumulated other comprehensive income. The following is the journal entry: debit cash for $31,000 and debit accumulated other comprehensive income for $2,000 to close the credit balance, and credit investment in available for sale securities for $27,000 and credit realized gain on disposal of available for sale securities for $6,000.
Thank you though.
Salim Liela Amakmona.